morning, everybody. It's the 9th of March 2019. It's Michael here from the Trading Institutional Order Flow thread on Forex Factory. I thought I'd do a new video today. It's been a while. Um, we're going to resume the video schedule over the next few days and weeks. But I thought I'd start this weekend and thank you to all of you who've been in touch with me requesting the videos. I appreciate it. I'm glad you find the material useful instead of me just blabbing to myself on YouTube. So thank you all for the feedback. I do enjoy making the videos. It's been quite busy personally and professionally the last few months, but we're doing what we can. So this weekend, I thought I'd start off with something that a few of you have asked, and reading on the thread and talking with the traders on there, looking at some of the basics of supply and demand. So we're going to start with that this weekend. So I hope you find it useful. I thought I'd start off talking about how we go about identifying supply and demand zones. So it's a sort of back to basics lesson. Hopefully it's not too long. I don't mean to keep you very long. So I'll just talk you through how we do identify the levels for those of you that are relatively new. And for those of you who are already using the methodology, I hope you think of it as a review, which is always good to do from time to time as the first quarter is also coming to an end. Okay, so when we're talking about supply and demand zones, as you all know, for those of you who are already using the methodology, we're talking about really levels of price where we have significant moves. So the first mistake that people often make when they're looking for these levels is to focus on that term zones. That it's a slight error, slight but significant, because what you tend to train your eye to do is immediately you go on a chart, you want to start looking for zones. Where are the supply and demand zones? Really, the way to think about it and to start doing it is to ask yourself, where are the moves? Where are the big significant moves that catch your eye? And as always, you always want to do it systematically so that it's a repeatable process. So you always start with where price is at the current moment. You always start with current price. You always want to know, where is price right now? And obviously, when you're looking at supply and demand levels, you're looking at above where price is at the moment for supply. So you would go above where price is right now, making sure that you are not hitting any candles as you go up and left. You want to clear, for example, all these highs. You want to clear all these highs that are to the left. You want to clear those. You want to go above them and look to the left to find out where are the big drops in price, because we're looking for supply, meaning we're looking for down moves in price. So you want to look for big moves like this. You see, I hope you can see this, and I'll zoom in a second, but you're looking for big moves like that. You're looking for these kind of moves. This is where we're starting from, right here. So you're going above, and then you're looking left, right here. You're looking for, where are the significant moves in price I can see. So that's where you see them, and you can see these. These are the two big moves above where price is at the moment. Now let's zoom in into those levels. So these are the two areas that we identified, right here and right here. Now we know that there are only four kinds of zones. Two of them are examples of supply zones and two of them are examples of demand zones. So for the demand zones, you have the drop, the base, and the rally type of a zone. And the other zone is the rally, the base, and the rally type of a zone. Those are the demand zones. The only two types there are on any chart, anywhere, any time frame, any market. For the supply zones, you have the rally, base, drop supply zone and the drop, base, drop, supply zone. Those are the only two examples of a supply zone on any chart, on any time frame, in any market. There aren't any others. These are the only four types of zones we look for. So what I would suggest you do once you identify the big drops is to say to yourself, so what kind of zone? So in this case, we're looking at supply. What kind of zone is this? Is it a rally base drop? Is it a drop base drop? Obviously, in this case, it's a rally. Price is base. They drop, they base again, they drop. So in this example, you actually have two levels, the two examples of the supply zones together. You have the two of them there. They're very close together. So in this case, supply and demand traders are not. You don't have to be worried about exactly pinpointing. You're looking for zones, areas. So you could actually just make them one big area encompassing both. So you have the rally base drop above with the one candle there, and the drop base drop with a bigger candle. But they're also close together. In this case, let me make that bigger so you can see it, that you can put both of them pretty much. You can draw the whole zone like that, and that is the big drop that we're talking about. See, that's what catches your eye when you've trained them, you've looked at enough charts. You're looking for this big moves in price, not the little small ones. Here's a big move. There's a big move. You can see where prices came back and went back into it. You're looking for that. Now for this one, what kind of zone is this? Obviously it's a rally. You base, and then you have a significant drop in price that has continued down. So when you're going to draw your zones, you want to make sure you encompass where the origin of that big drop is, as close to the beginning of the move as possible is where you want to place your lines. And that's especially for the poster Boris. That's because I know you asked exactly how would you draw the zones. So that's exactly where as close to the origin of the move down as you can get it. So there's the origin of that big move. It all started somewhere in here. If you want to be particular, you could actually put it like that, right at the origin of the move. But again, they're so close together, there's no need to be too tight about it. That's the whole area right there. So in a nutshell, this is what you're doing every time you look at a chart. Every time you look at a chart, you're looking starting from where price is at the moment. You're looking up and left. When you're looking for supply, you're looking for the big moves in price. Don't look for the zones to start with. Look for those big moves. Trace them back to where they start from, and that's where you can isolate the zones. Okay, let's do the demand and we'll finish the video. Again, I don't want to keep you guys too long. So for demand, it's just the opposite. You're going down and left and you're looking for the big moves up this time. Not the big moves down, the big moves up. So for example, starting with current price here, you can see this. I think we would all agree that this is a significant move relative to all the other candles around it. That's a big candle, the one before the last one. This candle right here, that's a big move. Let's find out where it started from. It started from somewhere in here. This wasn't a big candle, this one was the big candle. So we know that the demand is somewhere in here. So when you're going to draw your lines, again, you're going to try to isolate, get them as close to where that move started as possible. So you could draw it like that. In this case also, just because of the structure of this, the way this candle is inside this one, if you want to be generous with your lower level, you could also draw it like that. That would be perfectly fine. What you shouldn't do is try to do that. Those are not the levels. It's more there. As close to the origin of the big move in price as possible is where you want to start. So where the proximal line will be. That's where you want to start the zone from. Where you put the lower zone, again, you can put it here in this case, for me, that's a bit tight. Just again, that's just out of experience of doing this for so long. That would be a more accurate way of drawing this zone. Okay, so that's the demand closest to current price, the fresh demand that is. That's the fresh supply closest to current price. So this one has been um, tested quite a few times. We're back up into it. We are yet to break it, so you wouldn't be doing anything wrong by still leaving your lines in there. But in terms of freshness, by freshness, again, just as a reminder, we mean levels that prices have left, whether to the downside for supply or have left to the upside for demand, but has not returned to it. So levels that prices have left but hasn't returned to yet. And starting with current price, you want to go, where is the nearest level below where price is right now that it hasn't come back to? That's when you're doing demand. Where is the nearest level above where price is right now that it hasn't gone back to, meaning that it's fresh? That's the nearest opposing supply zone. Okay, I hope that mini lesson is useful to you all. Again, thank you to all of you who've been in touch with me. The roundtable is doing well. The guys are doing great. So thank you all for your messages. I hope the video is useful, and we will do more of these. The next one will probably be a market review. We'll look at the weekly charts or the daily charts depending on the situation. So have a great weekend, everybody. Trade safe. Bye.